Hello, everybody. Welcome to Tuesday. The S&P 500 was down 0.4% today, kind of snapping a nice win streak of 6 days in a row that the market had. Probably really just reacting to, the fact that we've up the last 17, the last 20 days, based on some of the relief of the tariffs, the pauses and the different, renegotiations with China and what have you. The market has kind of, made a nice run here. And lots of people are talking about the market might be under appreciating the tariffs themselves and the impact that they might have. However, I think the main focus is going to kind of shift over here to the tax cut bill that they're working on. And I, again, am looking kind of day by day as they're talking about it and working on it. What's the bond market doing? So, for example, today, if you look at the overall treasury market, and I use a couple different ETFs for that, was down 0.13%, which means, the yields are going up. And again, you want to watch for that bond market to see if it starts to really panic about the amount of money that might be in the deficit side of things as this tax cut goes through. We're trying to keep these current tax brackets and the deductions and what have you permanent, and then add some other deductions for overtime and tips, and add an extra, standard deduction component for people over 65 to offset Social Security taxation and what have you. All of these things cost something, and how much of an offset are we going to have for cuts? What are those cuts going to be, and then when are they going to be? So there's a bunch of pieces in here that I think are kind of fascinating. Again, they don't have the 60 votes to get through the Senate, so the reconciliation process is used. This gets abused pretty constantly. And so, they're going to try to show how they're going to have this fantastic growth. I remember 2017, for example, the last big tax cut bill came through, and it was going to be revenue neutral. We weren't going to have, deficits should be dropping or at least staying the same. That didn't work out at all. And that's not unusual. And that's probably what we're looking at here. And so they have to be able to craft something that the bond market believes won't be too onerous on, the issuance of new treasuries. And so I do watch that. I would say if you look at the longer term chart of treasuries, really, there's nothing to be that concerned about. It's just kind of trading in a range. It has come down a bit from its high, especially since, Liberation Day and those types of things, as the market is worried about some of these things. But overall, the pattern is nothing to be too concerned about at this point in time. And so we'll have to see how things play out there as far as that goes. But I think the market still has a lot of momentum. Maybe it's getting a little bit, heated up just because it's been up so many days out of the last 20, that we're going to end up with some type of a pausing motion here and what have you. As I mentioned yesterday, we're kind of running into a lot of overhead, in terms of resistance because we've been at this price before, get around 6,000 again. It starts to kind of come back down, and it might just take a few times to kind of get going, if it's going to keep going. We are in a zone right now in between, all of these purchases that were made for people that were looking forward to, the possibility of tariffs. Like Home Depot reports today has good revenues. Yeah, of course they do, because everybody's running around buying things because they're afraid that they might go up in price. And then, what are the actual impacts of tariff we might not see until July, August, September, or something along those lines. So, right now the market's just kind of floating along without this knowledge as far as that goes. And again, impacts of tariffs could be minor, could be major. We don't know. We're not even sure what the tariffs are going to be yet, because there's still a lot of them are on pause. So, we'll have to, as we go, we'll find out more and more, and things will probably start to solidify here at some point in time, make it a little bit easier. But anyway, that's where we are today. Not a terrible day, actually. A little bit of a backup is probably not a bad thing right here, especially after 6 days in a row up. You don't want to get too hot and end up with, a pullback that's a lot bigger, and then people start to kind of panic and you turn into a much bigger pullback. So again, I've always said that little pullbacks and little periods of times of rest on upward moving markets is a really good thing. So I see today as an okay development. So anyway, look forward to being able to see you tomorrow. Thank you.